Good afternoon, everyone, or good morning, good evening, wherever you are in the globe. So welcome to this last session of the first day of this conference. I think it has been already quite an intensive day. We have heard a number of interesting remarks by different prominent speakers. I think it's clear to everyone by now that this issue of Fintechs actually get into a complex set of opportunities and risks. Of course, risks should be in principle the main focus of regulators. And this type of risk basically comes, as has been discussed at length, from the potential for big techs to leverage technology and particularly data superiority to build dominant positions in different market segments, and in particular the market for payment services. And that concentration, of course, could have serious consequences, not only in relation to market contestability, but also, as has been discussed, particularly in the previous panel, also in areas like adequate market functioning or eventually also financial stability. So those risks certainly justify actions taken in different jurisdictions around the globe to introduce some specific regulation, what we call sometimes entity-based regulations that with the aim of addressing the specific risks that big techs actually generate, particularly for the financial system. But of course, regulation may not be the only game in town. There could be other policy actions that could actually be implemented in order to address the risks posed by big techs. And indeed, there could be a case for governments to offer public goods, to put in place public infrastructures that could well constrain the ability by, sort of large players, in particular big techs, to appropriate for themselves all the benefits of the economies of scale or for network externalities that their activities could actually generate. And this is the approach which has been already followed in several jurisdictions. We just heard the example of Ghana in the previous panel, but it's certainly as well the case of India. In this country, authorities launched in 2016 a unified payment interface, or UPI, run by the National Payments Corporation of India, NPCI, which constitutes an open and efficient platform in which both the commercial banks and technological companies, big techs, fintechs, participate and offer their services. UPI is a success story. I mean, we are talking about UPI processing more than 6 billion transactions every month. So I think India's experience can therefore be extremely helpful to understand different forms of public intervention aiming at grabbing the benefits while at the same time minimizing risks associated to the operation of big tech players. That is why I think we are extremely fortunate to have with us a highly qualified speaker that could help us understand India's approach. So let me immediately welcome Dilip Asbe. He's a managing director and CEO of the National Payments Corporation of India, NPCI. Prior to this, he was the chief operating officer of the same company, and he has played an absolutely pivotal role in the design, the building, the operationalization, the management of large-scale innovative payment processing platforms in his country. He's a formidable leader to the core. He has been recently actually recognized with the Change Maker of the Year award for the revolutionary product UPI, which he spearheaded by one of the leading business dailies in India. So Dilip, thank you very, very much for participating in this event. In principle, this session is structured as a conversation. It will be more of sort of an interview. But let me start by asking you first to provide us with some brief introduction about UPI, what UPI is about, how it works. So Dilip, please, you have the floor now.
So thank you so much, Fernando, and thanks to BIS for giving me this opportunity to talk to all of you. And let me first talk about NPCI, Fernando. I don't know how many people would know NPCI. NPCI is an organization which was created and nurtured by RBI, which is Reserve Bank of India. I'll keep on referring it as RBI in my conversation. And it is created as a public good. It is what it means is it's a not-for-profit company. It can make the profit, but it has to redeploy the profits back into its operation. It doesn't give any shareholder any money back to the shareholder in that sense. The ownership is with the banks. Very recently, the ownership has been diversified to some non-banks as well, which are the regulated entities by the RBI. And it is actually set up as an extended arm of the RBI and the government to grow the digital payments and contribute back to the economy and scale the economy in that sense by increasing the speed of money, the digital payments, reduction of cash, and those kind of things. Being a not-for-profit, obviously it helps for support of non-monopolistic pricing. So it kind of guards the country on that. It does not depend on gyrations of the stock markets, protects the public good from the private interest, and the stakeholders of NPCI, which is including the public, government, RBI, the banks, and the ecosystem, are very happy that NPCI is not for profit, and NPCI's intent is not profiteering or valuation. That kind of gives a lot of comfort back to the ecosystem. NPCI is very tightly regulated by the RBI, and for the right reasons. And the focus is, NPCI continues to remain very efficient and innovative. And we compete with Visa and MasterCard today in the country for the card payments, mobile payments, and our approach is always the localized innovation to compete with the giants like that. When we look at UPI and Aadhaar, which is the unique ID of India, and it's kind of these two public good infrastructures have actually fueled the whole growth of the fintech ecosystem, the digital payments, the digital KYC, all sorts of innovations back in the fintech community. And there is a BIS paper, and it says that if because of these two public infrastructures, India has achieved in 10 years what it could have taken a half a century to achieve. We have about 1,000 employees. We are a deep tech company. We build our own softwares. We own the IP and the softwares what we build, and we follow a very transparent approach back to the ecosystem in terms of whether it's a data decisions. While the regulators are very transparent worldwide, but the payment system operators are not. So precisely in consultation with RBI, we look at that. We are very transparent back to the ecosystem. So now, Fernando, let me go back to UPI and how it started and how it has contributed back to the ecosystem in last few years. When we look at 5 years back, India had about 50-60 million people who were working on active on digital payments, and the digital payments was only in the top cities in the country. And then the RBI started taking some steps, and let me list out those steps. RBI first started the payments bank as a category, given a license to few of the telcos. It's some of the small finance bank category started. Some of the microfinance institutions were given the licenses, and then the NPCI ecosystem was started, and some of the non-banks also allowed to participate in UPI, IMPS, those kind of things. And I think the intent was to fuel the whole. India is a vast country of 1.2 billion population, and it's a very diverse country, and we need a lot of capital, a lot of players to take the financial inclusion to the nook and corner of the country, and that was the whole intent, and that's what the UPI journey, start of the UPI journey. And while we started UPI, we had seen the example of what's going on in China, because obviously leader in mobile payments, and we had seen that China has the two large players, Alipay and WeChat, who are non-interoperable. The market was fairly fragmented, and basically, I think it's RBI's wisdom to create a fully interoperable system like UPI. The government also is very keen on digital payments, Fernando. So obviously, whatever growth you're seeing in India, the government also has to take a credit for that. And none other than Prime Minister Modi champions the digital payments agenda, including the creation of the JAM Trinity. We call it Jan Dhan, which is the account, Jan Dhan account, the mobile and the Aadhaar, which is all put together 1 billion, over 1 billion each. So that kind of, so that's what is the starting point of UPI, and that's how it started, Fernando.
Okay, many thanks. And this looks like quite an exciting journey, the one you have gone through. Tell us, if you had to summarize actually the main social benefits actually that has been achieved since the creation of NPCI and UPI. I mean, what would you stress in relation to this? I mean, you are supposed to provide the public good, so what type of public benefits you have brought to your country? And also, if I may, we will be also interested in knowing what have been the main challenges that you have found along the way.
So today, today the public benefit, if I just have to look at the current numbers, Fernando, it is, UPI in this current year, as per the current run rate which is going on, we believe that it will cross about $1 trillion in the current financial year. We have over 200 million users on UPI and about 50 million merchants. So I think this kind of creates a huge potential. We process about, we are going to reach very soon 4 billion transactions a month, financial transactions a month. We process equal number of non-financial transactions on UPI platform. Obviously, we don't speak about it, but it's a kind of it has become already a mega platform in that sense. And today from the current state, we believe that UPI still can grow 10x, right? Because we have another 500 million users to reach. We have another 50 million merchants to reach. So I think the whole collaboration, the whole investment will continue back into the payment ecosystem in the country, and we believe it's going to be another 10x growth possible. So you can imagine the kind of it helped India to deal with pandemic in a very efficient manner, because a lot of small merchants who could deal with the contactless payments in a big way during the pandemic. People could send the links to the customer, people could pay on the link. So fairly useful back for the India. The challenges, obviously, as you could expect, right? The challenges were taking the ecosystem together and in a big way, and a lot of hurdles in the last 5 years to take ecosystem together. India is a bank-led financial system, and when you look at the UPI, takes the best of the both worlds, right? So what it does is it allows the money movement continues to remain with the bank, and the front end now, the consumer app actually can be provided by a bank or a fintech. It has a choice. So banks today, if you look at the ecosystem, the banks also provide the apps, and non-banks or fintechs or startups or big techs, whatever you want to call, they also provide the app. The UPI architecture allows unbundling. So what happens is, the whole ecosystem becomes very diverse players with a different interest, right? And when we look at, we use the steering committee as a predominant mechanism to drive the decision making and rule setting for UPI. And when we conduct the steering committee, a lot of different views comes, and what happens is, while the time passes, the challenger has become the incumbent, or the innovator becomes the incumbent, and he starts resisting the change. So various situations we'll have to deal with it while we want to launch the new features, the new things on UPI. But obviously, it's given in any country like India. We understand that there would be different approach, different point of views, and our approach is to try to take people as much together, Fernando. But I think taking the ecosystem together has been the biggest challenge for us, and keeping with such a diverse interest and the point of views.
Okay, thanks. Okay, I noticed that of course you have put much emphasis on contributions in the area of inclusion. So basically to get more people making use actually of these payments facilities. And second, in terms of promoting as well innovation by the private sector, right? So probably interesting for the audience to know. I mean, how a public infrastructure like this one could provide actually benefits in those two specific domains, in terms of financial inclusion, in terms of in terms of promoting competition and innovation.
So, the RBI provides the 3-year payment system vision every 3 years, and it has been doing last 12, 13 years. And most of the NPCI platforms you would see are actually, adopted based on the vision document of RBI. And today, the UPI has been a catalyst to provide, as you rightly said, innovation and financial inclusion while keeping the diverse ecosystem together. I think because of three main, let me explain you the whole governance of how do we deal with the governance of UPI. And UPI actually operates on 3 layers. If you want to just look at, first layer is the trust of the banks with dealing with the money. Second, the first layer is also the front end, which is offered by the banks and non-banks together to offer UPI. The second layer is NPCI running the rules and regulations of the UPI ecosystem, and third is the oversight and approvals from the RBI to run the UPI ecosystem. Now, UPI, because of its the flexibility it offers in terms of whether it's an asset-light merchant acceptance, where while we have 5 million POS machines, we could grow, the ecosystem could grow back to 50 million in last 4 years. Because of the asset-light POS infrastructure, the UPI ID, which is like an email ID, like alias to send and receive the money, it kind of gives a various simplified ways to send and receive money. We have recently launched AutoPay, which is the recurring transaction solution back for the ecosystem, which once the customer sets up the mandate on the phone, you can actually virtually create the very starting point of, you can say, that programmable money on UPI. And very recently also we have launched something called as e-rupee, which is the prepaid vouchers on the UPI platform, and which government can use it in a big way to drive the social benefits, the gift cards, and those kind of use cases. So what I'm trying to explain is, the UPI is fairly context-free, Fernando. So the ecosystem can layer the solutions on top of UPI, which kind of helps to grow the innovation in the ecosystem. And with so much of payment data, what has been created now, where we didn't have any data for the Indians 5 years back, now the 3 streams, the credit, insurance, and investments, we believe that now they can grow because that needs a data, that needs understanding of the customer, and the payment data gives that understanding of the customer. And I believe these 3 fundamental streams can grow about 100x. The leveraging the payment infrastructure what we have built.
Okay, many thanks. Okay, let's now move to probably the core part of this conversation, which is obviously something which is in line with the type of issues that we have been discussing in this conference today, and we'll continue discussing tomorrow, which is this interaction between UPI and big techs. So I introduced this session by saying, referring to what has been discussed actually in previous session, that maybe India can provide an example of how the provision of a public good, a public infrastructure, may actually reduce the need to very, very sort of intensive intervention by specific regulation on the activities performed by specific players like big tech. So how do you see actually this? What could be the role of the provision of a public infrastructure? Is it true that by putting in place a public infrastructure, you don't have to be that intrusive in terms of regulating the activities of some relevant players in the different market segments?
No, it's a great question, Fernando. I think when I look at UPI as a public infrastructure delivering the public good, which is much more than big tech issue which you are raising, because when we look at from NPCI standpoint, and when we had decided that we will permit the non-banks to perform some specific role in UPI, we had to treat everybody equally, whether it's a fintech, whether it's a big tech, whether it's a startup. We can't actually differentiate between any of the players which are participating in the UPI system from a non-bank standpoint, right? But when I look back, I think it has created a win-win for a country, because for a large country like us, we need many players proliferating the payment system like UPI to such a vast country. And let me explain, but how the architecture of UPI kind of helps us to limit the risk which are created in the system. And let me take a point that whether the non-banks are creating a risk back on the payment system, and let me try to articulate how UPI architecture and the design supports that. The first point is the money remains back with the banking system, right? So money doesn't go out of the banking system. So while the customer is using a fintech app, the money remains back with the banking system, which is fully regulated by the Reserve Bank of India. The second is the access to UPI is only provided through the banks, right? So there is a category called payment system provider, PSP banks, and all the big techs actually comes, big techs or a fintech or anybody comes through the PSP bank to the UPI system. The authorization and authentication are two critical activities in the payment transaction. Both the activities are actually performed by the PSP banks, right? So we have kept the control activities mainly with the banks. And when you look at in a way, what the UPI architecture forces the very tight collaboration between the banks and non-banks, right, to play this role. And earlier we used to get the complaints that the bank, NPCI is not treating the banks and non-banks at par, and the non-banks guys were complaining initially, but obviously when they saw that the takeoff of the payment system by the non-banks on apps, obviously this complaint died down on its own. And also, the other thing, very important thing, Fernando, I would like to explain is the customer trust. The way we have tried to protect, I'm saying customer trust or customer protection, what we have adopted. So RBI has announced that online dispute resolution has to be implemented. What it means is the customer can raise the dispute from his app, UPI app, and that dispute has to resolve real time. And it's very important. I don't think anywhere else in the world this has happened, but we have started implementing this with UPI. Few banks are live, but we believe that in 30 seconds, any grievance on UPI which is a technical in nature, will get resolved in 30 seconds, right? And that's a big step towards the customer trust on UPI as an ecosystem. We have put up a lot of penalties on delays in credit and those kind of operational inefficiencies on the ecosystem. We also kind of display on NPCI website very transparently the NPCI, the ecosystem, including the NPCI performance. So that kind of helps to build, kind of a complete transparency and the trust of the customers on the way UPI is being governed and managed in the ecosystem. So that's the way we look at it, Fernando. So obviously nobody can say that risks do not exist, but obviously it's a long-term journey. And I think our job is to ensure that how do we limit the risk.
Okay, I understand that it's not only about actually providing a public good, a public service. Well, you put in place this public infrastructure, but of course you establish some clear rules that will obviously help address as well, actually, the risk we are interested in controlling, right? So, for instance, what you said, right, is account services are just provided by banks, if I'm not mistaken. So that means, of course, that all payments are actually settled in commercial bank money. That's important, right? And second, there is this data sharing obligations, right? So that, in principle, upon consent by the customers, of course, that data could actually be shared, would have to be shared actually with all participants in the platform. So you provide the public service, the public infrastructure, and you establish very clear rules of the game. So how do you strike the balance between sort of regulating, while at the same time, in order to address risk, and while at the same time, of course, promote innovation, which is part of your objectives here.
Again, a very good question. And let me just, touch back your last point, very important point. I'll come back to this answer. The data privacy law is already around the corner, right? And we believe that already the market has started. The draft code is already in front of has been released back to the country, and we believe that any moment it will get approved by the parliament. And it's very important, right? Because that data sharing is another risk back to the ecosystem, because any ecosystem which is generating a lot of data, the data sharing risks are paramount. And we believe that, because the draft code is already there, the ecosystem is already adopted to the draft code. So that kind of mitigates the risk of, having the data sharing, the data selling, or illegal use of data without the customer consent, the consent architecture. All these things are already started getting adopted by the ecosystem, and we believe that the privacy law would be in place. Now, coming back to your question, see, I think India experience demonstrates that it's never a regulation versus innovation. That's our experience says that, because when there is a responsible innovation in a regulated space, right, with the backing of the regulator and the government, it provides the population a great value from any public good infrastructure like UPI or Aadhaar, which I spoke about. So, let me give you some principles, and we obviously got to some issues, and today what we have done is, we have adopted the principle of direct and indirect regulation while participation in India, UPI. And when you look at the direct regulation, obviously the banks which are directly regulated, which are direct participants on UPI, the indirect regulation is worldwide adopted back for the merchant corporates who access the clearinghouse using their sponsor bank. So similar regulation which was done, which I explained just some time back about the PSPs, which is the payment system provider bank, and the TPAP, which is the third party app provider, which kind of participates with the UPI with the indirect regulation. And technically, when you use the big tech, I would like to highlight that some of the big techs were already present in India or worldwide in the payment system before they started in UPI. So, for example, Google or Android Pay was already providing the card-based services. Amazon, because of their e-commerce businesses, already they were tightly linked back to the payment system. And I think the only exception I could say that the WhatsApp started the payment system entry with the UPI in that sense. And when actually, and let me narrate you one experience, and what we tried to formulate the policy, which we're trying to help the innovation and regulation as well. Because while you look at the Google Pay, Phone Pay, or any other leading third-party app provider floated their own app, WhatsApp already had, when they were starting UPI, they already had about 400 million active daily users. So we obviously were worried that, the WhatsApp could have the undue advantage of their already large daily active users. And there we thought that, we need some regulation in terms of concentration risk, and we came up with a market share cap on the UPI ecosystem, and we put up a 30% as an overall cap, and we have given the 2 years time to the existing players. 2 players are above 30% right now. While the cap worked very well for the new players, obviously the existing players continues. Phone Pay and Google Pay are above 30%, and we kind of now have to ensure. We believe that the market should balance itself out, but if it doesn't, then obviously NPCI will have to take action, and we are kind of have to see that we don't, while taking action, we don't hinder any growth of UPI. So that's a challenge, but we believe that with WhatsApp coming in, with the other leading apps in India, Amazon Pay, Paytm, the market should balance itself out. We are also working with the bank because the banks didn't convert the mobile banking app to UPI in the beginning. I'm saying now we see that a lot of banks have now put in the effort to convert their mobile banking app, which are very strong apps, to be honest, and very trustworthy apps, very popular apps in the customers. So, iMobile, which is the ICICI Bank app, YONO, which is the SBI app, are in the process of getting converted. Right. So I think just to sum up, I think in India, if we work in the regulated space, because the government and the RBI both have an innovation-led approach, technically it never becomes so much of balance issue, right? And obviously there are some cases where the balance issue comes in. Obviously the regulator steps in to deal with the situation in that sense.
Okay, many thanks. So the situation now, I mean, again, on this interaction between big techs and UPI, right? Big techs are there, incredibly active. I mean, basically they are in the middle of large majority of transactions will take place there. But they are specialized in specific type of payment services, right? So it will, in Europe will be called like payment initiation or something of that sort, right? So they don't provide actually account payment services, right? So this is what they are doing. Apparently they find it profitable, although they cannot leverage on data superiority as they normally do in other parts of the world. So my question is, how comes that first the big techs find it profitable, this sort of very narrow type of business model, and second, whether eventually could we consider actually to allow them to offer other types of services in the payment chain? How is your current take in relation to this?
See, today, to be honest, I don't know what role they would like to play. I think they should know this better. And, I think RBI has a fairly diverse amount of licenses which are given to the non-banks, whether it's a prepaid payment issuer license for the wallet, that's a regulated category. Today many of the big techs like Amazon already has a license. PhonePe has a license on wallet. They're already regulated entity by RBI. The RBI also has come up with a policy or a license on the payment aggregator, payment gateways. So many of them would also apply those because they do this aggregation business in that sense in the country. So I believe that the game will keep evolving, Fernando. I don't know, to be honest, what is that their next steps would be, but there is some players amongst the big tech already are getting applied and playing some different roles. When there is a Bharat bill payment system which is operated by NPCI, so there is a biller on BO operating unit license which is taken by PhonePe and the others. So already there are mix and match scenario, if I may say so. But obviously, I strongly believe, looking at the huge under penetration of credit, investments, and insurance in India, I'm very sure that most of the non-banks in India, which is all big techs, fintechs, and startups, would want to play a role in credit, investments, and insurance. I think it's going to be very lucrative. I spoke about 100x growth possible in those areas. So I believe they will use payments as a stepping stone to leverage those areas.
And there will be, in principle, the policy approach by the Indian authorities will be actually sort of open to consider that possibility. If not, there will be a sort of regulatory constraint for particularly big tech to expand too much their business model and to get into different business lines.
So, I don't know, to be honest. Today, if they want to do credit, they can partner with the bank. They can partner with the NBFC, right? Non-banking finance corporation. If they want to do insurance or they want to be a mutual fund distributor, they can go to SEBI and take the license on mutual fund distribution, or they can partner with the existing license provider. So I don't know what model it will pan out and what will be their choices, but many of the fintechs are already started exploring these areas because India is flooded with the liquidity on investments on fintechs, and many of the investments are coming into these three areas, Fernando. So I strongly believe most of the startups and fintechs, including the big techs, would approach regular. Either they will do it indirectly, aligning with the existing partner, or they'll apply for the license on all the three areas directly.
What about? Okay, I think it's a very clear answer. So there could be a business case actually for them to get into different lines. In principle, the regulatory approach will not necessarily provide obstacles for that. But what about commercial banks? I mean, you have this infrastructure. There is much data going on there. In principle, they could have access actually to that data upon customers' consent. I mean, Do you think that
So
banks are
Fernando, I
actually
think
making use of that data, for instance, for the credit underwriting activities and other activities that banks would actually
so.
perform?
So the draft privacy code, which has been put up on a public domain, clearly articulates that the data is the customer's data, right? So anybody intends to use that data, whether it's a bank, non-bank, or anybody in the supply chain, has to obtain the customer's consent, Fernando. So I think the rule will apply to everybody in that sense, whether it's a customer, uh, customer's bank, or customer's other bank, or to the non-bank. Anybody in the supply chain wants to use any data, they will have to go back to the customer and ask for a specific consent in that sense.
Okay, very good. Thank you very much. That's been an interesting experiment. Anyway, of course, looking at UPI, all this information you have conveyed to us, incredibly successful initiative in many respects. So the natural question here is about exportability. So how would you see actually the UPI model being introduced in other jurisdictions, both in emerging market economies as well as in advanced economies? What will be the conditions actually that a jurisdiction will have to meet in order to have the possibility of putting in place platforms such as UPI? I mean, have you thought about that? I'm sure you have. I mean, what type of hints you could actually provide us with in relation to this?
So Fernando, again, very good point, and I would have spoken about this in the presentation. And so we have formed a NPCI International to look at the internationalization of NPCI's all platform, including UPI. And it's a separate subsidiary, and it has its own focused approach to deal with the world market. And somewhere we believe that the low-cost real-time payment system with a vibrant, vibrant fintech ecosystem, it really adds to the country's economy in a big way, in all sense. So we believe that any country adopting a UPI-like system obviously will have to have the government and the regulator backing. Fernando. Otherwise, I don't think it's possible for any country to build a diverse payment system, or a latest payment system like UPI, which has diverse players from all section. It is impossible to do that. But if, for example, we at NPCI International, I think working with some of the global regulators to see whether they need UPI, and it's already proven the scale and the operational capability, and the latest features what any country would aspire to have for. And NPCI is ready to kind of open source UPI to these countries under the government to government or a central bank to central bank arrangements. So we are very open, because we believe that we have created a public good for India, and I don't think NPCI standpoint we would like to see it becomes a public good of the world in that sense. But obviously under the regulator to regulator or the government to government arrangements, and I think we can save a lot of efforts by the country to reinvent the wheel entirely, which we have struggled last 6 years to get to build a world-class platform like UPI. But obviously it's their choice. But we are approachable, Fernando. So any country is looking at UPI can approach us directly through their government, to regulate their regulator, to us, to our government or our regulator, and we'll be very keen to engage into dialogue and open source UPI, so that they don't depend on India, they don't depend on NPCI to continue their domestic journey in that sense.
Okay, many thanks. I think it's a very good offer, frankly. That may be interesting for some people actually listening to this conference, certainly because of course you provide a very interesting example that could actually be exported to other jurisdictions, at least in other jurisdictions meeting the conditions you basically explained, particularly in what respects government buy-in and all this. Right, I think it's very helpful. What about cross-border? Cross-border payments, cross-border transactions? Do you feel that this type of framework could be scalable, can actually be used in a cross-border context? Do you have any, maybe already some practical experience on cross-border transactions being performed with UPI participation?
We worked with BIS to write the BIS and the Monetary Authority of Singapore to create the paper on the real-time, cost-efficient cross-border transaction. Obviously, we have not implemented that with any country, but obviously the discussion is going on as of now. If you and if you look at the currently the challenges in the cross-border is, the sender do not have the 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 details of the beneficiary. The sender do not understand, sender or receiver both do not understand what are the FX conversion and the charges. The settlement to corresponding banking arrangement is fairly inefficient in that send, and the both side has the complex regulation and compliance requirements, which kind of makes it really very difficult to make this very efficient from that perspective. And recently the Indian regulator and the Monetary Authority of Singapore, Singapore's regulator, have come together to announce a real-time platform linkage between India and Singapore, which is India's UPI and PayNow from Singapore. And it is slated to go live by July 2022, which is next year. And what are we trying to solve there is, can we get the transaction done in 30 seconds, right? Max 60 seconds. Can we ensure the transparency of the charges to the sender, FX or any other charges? And can we ensure a very efficient settlement mechanism? I think these are the three problems we are trying to solve along with the Singapore system. And when we actually deep dive into this whole discussion, right? Many of the problems on the domestic payment system we try to solve, right, and which has been already solved. To just give you an example that getting the beneficiary details before we initiate the transaction in any real-time payment system is already in place, right? Already in place. When you look at the validations transaction, already in place in that sense. When you look at the availability of the smart UI UX to the customer, already in place, where you can show the charges, the FX conversion, all these things. Near real-time settlements 24/7 already in place. Effective settlement guarantee mechanism already in place. So I think the real-time payment systems are really in a position to all the three problems which I spoke about to solve. Obviously, it solves all the ticks on the box, but what needs to happen is two regulators have to come together to make this happen, because there are going to be challenges to solve this, and I think the regulators' role would be very crucial. Today, the settlement efficiency also can be brought in by the regulator, because today most of the domestic payment systems settle in the regulator's account, bank's account in the regulator's books. So if the international settlement also happens regulator to regulator, it kind of adds up, gives that guarantee in that sense, and also adds up that efficiency leg what is required. Otherwise, that pre-funding arrangement, bilateral funding arrangement, all those things may not work out, Fernando. But I think it's a very possible scenario, and we have decided to go live in July 2022. So I hope next year, when we speak similar time, I will give you the good news that we have gone live, and now this real-time payment system cross-border is replicable across the world.
That would be great. Huh? Sounds like a dream. Very good. I'm conscious of time. We're supposed to finish in 1 minute, but being in the BIS, you will expect I should ask you something about CBDCs. So just your views about what is the scope to introduce a CBDC in your country, in India, whether the existence of efficient, fast and cheap payment systems somehow reduce the need of CBDCs, reduce the business case, or weakens the business case for CBDCs or not. What is your view about that? I mean, what would be your expectation in terms of prospects for the introduction of the central bank digital currency in India?
So, obviously, I also got to know that the RBI is planning to launch the CBDC, and every country has a very different objective to launch CBDC. And and as you rightly said, if the country already has a very efficient domestic payment system, it kind of narrows down the need of CBDC in that particular country. But let me tell you about India. India has about all of us know 1.2 billion population. Still, cash is fairly high in India. So I think if the CBDC can replace the cash, and that can actually really add value. And let me tell you two properties or kind of value add for the cash, why consumer prefers the cash for various different reasons. But I think the two reasons is the instant settlement, and second is the anonymity, what it offers back to the customer while doing the transaction. So I think if CBDC in India is able to address these two aspects, I think there is a huge space in that sense for the CBDC to play a role in India. Obviously, the RBI will decide at the appropriate time, because various countries are in different times and different places of trials, whether it's a retail or wholesale, whether it's a token-based, account-based. So obviously, RBI will disclose its plans at the right time. But we believe that if CBDC attacks the cash, right, because nobody would want to create the duplication in the country. So I think if it attacks the cash, it can add huge value. And in that sense, RBI's policy has been that the multiple payment system, the choice to the customer is paramount in India. However, I don't know. I keep hearing about the cross-border transactions using CBDC. It's a very complex topic, Fernando, to discuss in a few seconds, because every country will use a different token structure, the different smart contracts. So it's going to be very complex to connect the one CBDC to the other CBDC. While obviously it has the advantage that if you design the CBDC is starting on a clean slate, so you can keep those design parameters in mind. But obviously, the token exchange, the token standards, the smart contracts functionality to match it between both the countries is going to be very complex and very difficult process. But it's possible. Obviously, it's possible.
That's great. Many thanks. Did incredibly insightful remarks. I think you have added a very important new angle to our policy analytical discussion in this conference. So I appreciate very much your contribution. Thanks a lot. So let me adjourn now this first day of the conference by reminding you that tomorrow we will have the second day of the conference. We will start again at 1 p.m. Central European Time, with an incredibly promising keynote speech by the governor of the People's Bank of China. I'm sure that that speech will also be highly illuminating. With that, all the best. Enjoy your rest during the rest of the day, and I hope to see you all again tomorrow. Okay, bye.
Thank you.